UBS agrees to buy Credit Suisse as part of an effort to restore trust in the banking system. This comes as the Federal Reserve is set to make a decision on whether to hike interest rates. Alexandria Hoff has more.
Global stock markets sinking Monday, one day after Swiss authorities arranged the takeover of Credit Suisse. UBS deciding to acquire its rival for more than $3 billion after a plan for the lender to borrow money from Switzerland's central bank did not reassure investors.
The combination of those bond purchases and negative rate policy has just totally impaired the profitability of European banks. That profitability just became such that the business couldn't continue to operate.
The decision comes as pressure builds on smaller banks following the closure of Signature and Silicon Valley banks this month. Late Sunday, New York Community agreed to buy a portion of Signature as part of a nearly $3 billion deal. But the move has done little to ease fears of a crisis, and people are calling on Congress to take action.
Congress and this administration that have massively spent and borrowed money at a reckless pace, trillions of dollars. That led to inflation nation. That's put incredible stress, financial stress on these banks.
All of this makes it less likely the Federal Reserve will hike interest rates when it meets this week. Financial experts predict the Fed will limit its hike to 0.25 percentage point, about half of what they expected earlier.
They need to remind people credibly, which is going to be hard, credibly, that we have multiple tools. Interest rate policy to deal with inflation.
All eyes will be on the Federal Reserve when its meeting kicks off on Tuesday. In Washington, Alexandria Hoff, Fox News.